And it's great for me to see you all in such vast numbers. And to welcome our three speakers, who I'm pleased to say are all here. And that's always a great relief when you're the chairman, you know, because... Okay, all right, a bit more volume there, thank you. Down the back there. Yeah, very warm welcome. And this, of course, is our Leading Edge series. And we've been wondering whether, you know, the evening really worked for everybody. And it looks like it does. So we've quite judiciously booked lunch and evening for the alternate months that we do this for through the year. And we're at a decision point. And I think that on the back of this, I reckon we're probably going to keep it up, yeah? So yeah, but in Sydney, I know what Sydney siders are like. At lunchtime, I'm busy, or I'm on the desk, and then the bell rings, and I've got to go home and off to Manly or Cronulla or somewhere. So it's great, and it also coincides with some major changes that we're making with the Sydney Mining Club. And I'd actually like Georgina Moodie, would you mind just coming up here? And that's in large part to blame, Georgie's to blame for all of those changes. She's now, she joined us about a year ago at the beginning of COVID, and, you know, sort of pretty much was difficult to do nothing for so long, but we have rebuilt a lot of the systems. We've rebuilt the website.
Eventbrite, the way we book, and everybody's handling it beautifully, I must say.
Yeah?
Yeah, totally.
Yeah, like last month I noticed you were having to talk everyone through, press the button. And,
I was.
Yeah, okay.
Johnny Mac, I don't know if he's here.
No, you can say what you want, he's not here.
Oh, good.
No.
He was hopeless.
Well, he was hopeless. Anyway, look, thank you so much and for getting this thing wriggling. I think we're about to do a fairly major lift in the brand. The mining club has been around for a while, and noting also that our patron Trevor Sykes is not here this evening. Trevor's keeping clear of any COVID situations, mostly also because of his wife Daya. But he's always here in spirit, the great man himself. So we forever appreciate Trevor's patronage. Lucy, would you like to join us up here as well? It is when is the actual International Women's Day?
Of course you know the answer to that, Julian. Monday, the 8th of March.
Oh, right, I'm speaking, aren't I?
Of course, that's right.
Do I have to wear anything different? Or?
Pink's good.
Pink.
Yep.
Yeah, well done.
What about a skirt, high heels?
Sure.
Yeah?
Yep.
Lucy, we love supporting anything to do with women in mining, and I'd like you to just tell everyone a little bit about it and where you're at with it. And you're both supporting it, yeah?
Of course.
Okay, all right.
Of course.
Okay.
Look, thank you so much, Julian. And, hey, it's lovely to be here. My name's Lucy McClean. I am my day job. I'm with AMEC, the Association for Mining and Exploration Companies, but also I am very fortunate this year to be chair of New South Wales Women in Mining. So that is a volunteer-run organisation, and we have amazing programs to support, empower, promote and nurture the great women in mining, and of course retain more women in mining, because we're still only at about 10%. You can probably see from this room and you know our industry is coming up to a skills shortage. So, of course, let's not forget half the population, ladies and gentlemen. But look, the programs that we have with women in mining are, of course, the mentoring program, award-winning mentoring program, we like to say. That will be kicking off very soon. And the other programs we've got webinars as well as in-person functions. And we really do appreciate your support. It's a very easy sign up with AusIMM. And there's a simple link there, and then you'll get connected with all of our information. We really appreciate the support of Sydney Mining Club, and it's great to partner and promote the important work of both organisations, really. So Monday, as you heard, is International Women's Day, and I really hope that you are all doing something to celebrate this important day. This year, every year, there's a theme, and this year's is Choose to Challenge. And look, I think we have all heard the media. There's a lot to be challenged right now, and certainly I would challenge you all to think about your organisations, how you can support and empower the women in the industry and do more to really encourage and mentor them, especially in those higher levels. So look, that's really it from me. Thank you, Julian. We really appreciate it. I'm sure next year you'll hear even more work that we're going to be doing with the Mining Club going forward.
Lovely.
Excellent. Thank you.
Thank you. And just on, Lucy, on a serious note, I am actually preparing to speak next week, so I was being frivolous there. Look, I want to take the time here just now with our sponsors. As you know, we've got a brand new sponsor who
Sydney Stock Exchange.
Sydney Stock Exchange, which is we're very excited about. But I do want to just start from the beginning on my right over here, is to just run through these names so that I embed them in your mind, so that you can thank them in person, so that you can give them their business. You can tell them how much you appreciate them running your mining club, because that's why there's no membership fee, because of these great companies. And look at them all. And they're all behind your club because you come here. So the greatest thing you can do is come and talk to them and show your appreciation. CRU, the miningnews.net news channel, New South Wales Mining, which is, of course, the Minerals Council of New South Wales, Veritas Stockbroking, which is the Reynolds sisters, Bryce and Piers. There he is. And Deloitte, the accounting firm, Empire Energy, where I work, and we've got Bear Doll Bear, they're a platinum sponsor.
Sydney Stock Exchange.
What grade are they? They're
a silver sponsorship.
They're a silver sponsor. Great, lovely. Yeah. And AME Group. Then we go on to, who can I see down? The Australian Resources and Investment Magazine, the ANZ Bank, which we're familiar with. I get letters from them all the time. Hetherington Title Service, David Samet, which is a wonderful service. If you don't know Hetherington, talk to David. APM, Australian Print Media Graphics, Simon, who you see with a camera here. Research as a Service. Now, Finola Burke is here. Finola? Finn, where are you? Yeah, great. So thank you, Finn. Geos Minerals Mining, which is, I see Murray here as well somewhere, and AMEC, which is where Lucy is the other peak body of the mining industry. Now, that's a really impressive lineup of sponsors, and I just really want to take this time to acknowledge, as we do every time, because they make our world go round. We work on a different model. As we say, you come once and you're a member for life. Thank you to these organisations, and you don't have to renew every year, so please. Great. Is there anything you'd like to say about how things are running? Obviously, Georgina has really thrown, you probably noticed, a fresh energy to the Sydney Mining Club. We'd like to double our brand this year. Did I mention that? That's it. Is there anything you'd like to say while you're up here? Or?
No. I think we've covered it all.
All right. Okay. So big energetic year, and today 3 great speakers. So we will push on. And the batting order I've been handed, I don't know if there was a coin tossed or how it was came about. The batting order will be Magmatic, then Canterbury, then the mighty Pilot Energy. So New South Wales, of course, is experiencing a little rush of its own now, which is, I've been waiting for this moment. How great. There's been a lot of solid regional exploration going on, but this little buzz going up just over the back of the range up here is huge. Lovely to have it. And to tell us the Magmatic Resources story, please welcome to the stage Peter Duerden. All good, mate.
Yep. Thanks, Julian, I think. I think I'll get up here tonight. Technology up. Yeah, thanks, Julian, and fantastic to be opening up again, isn't it, and hosting these functions. So Magmatic Resources is a junior copper gold explorer focused in the East Lachlan and New South Wales. We've got an advanced portfolio of targets which we purchased back in 2014 from Goldfields, which is an important element of this story. A lot of the early money had been spent developing those early porphyry data sets, which is really, really critical. So we're coming into these at a drill-ready stage in a lot of cases. And, yeah, we've got ground along strike from Australia's largest gold producer at Cadia East currently, and along strike from North Parkes, a major copper gold producer, and also south of Tomingley's, Alcane's Tomingley mine there. So strategic ground, advanced targets, and we're giving it a good shake at the moment. As an overview there, the East Lachlan, world-class province, gold copper province, Australia's largest gold producer at the moment, Cadia East. Goes under the radar a lot, but yeah, 900,000 ounces or so at the moment, negative all-in sustaining cost, 35 million, or ramping up to 35 million tonnes per annum. It's a globally significant mining operation, and certainly the makings of Newcrest. North Parkes, very significant copper gold producer. CMOC Sumitomo goes under the radar a bit, the foreign ownership. Evolution with Cal, done a great job since they purchased in 2015. Taken that system from 3 million ounce to up over 10 million ounce system now. So a lot of good stories. Also Alcane's story at Tomingley, significant discovery south of the mine there, and it's truly a multi-million ounce system in itself. So we're seeing, and recent discoveries, as was mentioned, so the Boda discovery by Alcane and Sky Metals and a few other stories, just reminding people of the remaining potential and the prospectivity in the Lachlan more generally. Magmatic's ground is located along strike, so I'll talk a lot about the Wellington North project, which is surrounding in that Boda district, along strike from Cadia. A lot of unfinished business there. You can see 70 odd metre intersection. That's Cadia East mine grades. They're putting that through the mill down the road. A lot of unfinished business there from an exploration point of view. So very exciting times that we're positioned to start drilling some of these. Also north of North Parkes, that's our copper play. It's a classic North Parkes copper porphyry cluster that we have there. Again, pre-existing historical intercepts which are of mineable grades down the road at North Parkes. So a lot of that early spend have been done. Goldfields has spent 20 odd million bucks building these things up. Counter-cyclical acquisition by the Magmatic founders place us really well now to strike, in my opinion. And our third project in the Parkes fault zone there, south of Tomingley, 20 kilometres south of Alcane's Tomingley gold operations, and where they're tracking their recent discoveries towards the south. And also just refocusing Magmatic as a company in the East Lachlan. We did have a project in the Central Lachlan for Western New South Wales, and we were able to demerge that late last year and combine it with some key assets that we had identified that we wanted to bring in and have listed on the 20th of January, Australian Gold and Copper Limited, and Glenn Deemar, the MD of AGC, is here today. And I'll touch on that a bit because Magmatic's a major shareholder there, and it's an innovative way, entrepreneurial way that junior companies can add value to the shareholders and retain a major interest, and then maintain a focus in the area that we're looking at. Because we're small teams, there's three of us. We're doing our best to find a discovery. That's what's going to change things for us as a company. We lose ground eventually if we don't work on it. So you've got to find ways of leveraging those opportunities. Capitally, we are tightly held, a lot of ownership by the board and management. Goldfields retain the interest there, major interest, nearly 10%. We did a raising this week, so we're well capitalised to complete what I'll talk to you today as far as our future plans, and also put the foot down on a couple of opportunities that we think we're hoping to later this year. The East Lachlan are these belts of rocks within central and western New South Wales. Cadia Valley there. Keep going on about it, but it's a bit of a global freak and really shows the economics of a gold-rich porphyry system when you start getting the plus 0.4 gram gold along with the resource. It makes all the difference. So Wellington North, a long strike there surrounding Alkane's Boda discovery. Mile about 50 kilometres north of North Parks, a real North Parks lookalike, as I'm sure you'll agree when I show you the data. Tomingley and south there, our Parks project. And overlaying that, and of course we're in boom times anyway, but overlaying that, we've had some significant discoveries in New South Wales, which has really brought in a lot of investment and has got the industry really running at the moment here. Wellington North, zooming in there, it's a busy diagram, but it shows quite nicely the air mag there, the prospective rocks in and around Alkane's ground, they're shown in blue, Kaiser Boda, the two known porphyry systems in that area, and Mag's ground shown in black there. So I was really excited to become part of this story about a year ago. I had some involvement with the Boda story with Alkane, and you can just see there's a lot of opportunity in this part of the northern Molon belt. This is just before it dips under the Gunnedah Basin, and there are people exploring in that part of the world as well. But here you've got an area of a long strike from Australia's largest producer with opportunities for discovery still. So very exciting to be around during this time, to be a part of it. We're working there at the moment at Boda South, long strike from Boda itself. Notice Kaiser and Boda are offset the main mag highs, which we'll touch on a little bit later. We've got Rockley, significant zone of gold anomalism, not drill tested. Lady Ilsa, broad zones of gold anomalism, very similar to the early stages of the Boda discovery. Rose Hill, which will drill a very interesting hole into Rose Hill in 2 weeks' time, which will be the first time we've been able to get in there for some time. That's, as I say, there's an existing intersection from surface there, which is Cadia East reserve grades. So there are some obvious places we need to get into, and we are doing that. Keep moving. So a little bit more detail, some technical detail around, that's just my screen. It's flickering a bit. Detail about Rose Hill. So yeah, in 2 weeks' time, we'll drill a very interesting hole where the setting of Boda and Kaiser offset the main mag highs, which is over the last 20 or 30 years, classic porphyry exploration, go and drill the mag highs. Doesn't quite work in the Lachlan. A lot of the porphyries, the mag highs are significant. They're these monzonite complexes with lots of magnetite. But again and again, the pattern you observe is that you need to be off the margins of those. And so applying that same setting at Rose Hill gives you a very interesting target, because that's actually what the surface geochem is telling you to do as well, and also what the alteration is telling you to do. So step off to the western edge is what we're attempting to do there. We've looked at the Ridgeway alteration model. I worked for some time there at Cadia, and some of the important aspects of that are this albite alteration. You see the albite sodium rich from the seawater from the original genesis of the deposit, where the seawater is drawn down into the system. So it gives you a real clue to get these albite caps and albite shoulders around the deposits. So we're trying to apply that knowledge, but really here we're just drilling underneath a significant intercept of gold, copper and moly. But we're trying to do our best to put all the data sets together to spend the money as wisely as possible. We're also starting to drill multiple targets in this area up around Boda. So Boda South, stepping to the south 3 or 4 Ks, you've got the same magnetic belt of rocks with gold anomalism there as well. So you just have to drill those areas close to a major discovery like Boda is. And we're doing that. Also, just in that area, interestingly, one of the early goldfields that opened up in the country, and certainly New South Wales, was in this area, the Mitchell Creek goldfield, north of Wellington, near the village of Badangra there, and significant historic records of production there, 230,000 ounces of up around 30 grams per tonne. So there's a fair bit happening here, just generally with the gold alluvial workings, and Boda is a reflection of that as well. But there's some serious unfinished business in this area. We're aiming to be the ones to deliver some discoveries here. Most of last year, we were very focused on the Lady Ilsa target, which has showed a lot of similarities with Boda at the early stage of exploration. Broad zones, low-level gold, porphyry pathfinders. And what we found is the last drill hole that we did there was actually the best one. We're seeing 50-odd metre intersections, one at 45 at 0.44 gold, which is significant. That's highly significant in the area. This prospect has still got legs. We're investigating this southern extension. You see the same off the main mag high there. You're seeing a bit of a pattern emerging. Mineralisation seems to be off that main mag high. So we're trying to apply that knowledge, but we're definitely on the right track here. And this is the approach we're taking to try and quickly test these things, looking for the Boda signature, which is published and out there for explorers to use. And we're certainly, and it's a gold-rich signature. In the past, several explorers had been focused on the copper signature, and Boda's a little bit different, so you can actually quickly understand how things could have been missed. We're trying to be clever, but there's a lot of just simple things we can do here as well, and it's just positioning the company strategically in a corporate and exploration strategy sense to make that all happen. Now, copper, we have an exciting copper project out at Mile, 50 k's north of North Parks. You can see quite nicely there on the left-hand side the gravity image from the New South Wales data set. The red areas are the dense rocks of the Junee Narromine Belt, which hosts North Parks. And you can see a very clear relationship between where the main mining centres are and these low embayments, so these gravity lows within that broader belt of dense rocks. So North Park's got a very clear gravity low, Cowal does, and Mile does. At different scales, that's a really nice way to find these major porphyry districts. And then when over the years, explorers have known about this for a long time, gravity data sets are sort of the first port of call, and it's quite compelling. There's intercepts here of North Park's mine grades. So again, it's unfinished business. I like that saying. We're getting in there and we're positioning, and we've started drilling holes, for example, underneath that intersection there at our Kingswood target. That's a bit of a summary, very busy slide, but we're trying to make comparisons with the North Park's E26 deposit, which is one of the largest, Australia's first block cave mine at E26. See the relationship where the deposit comes up along the edge of that monzonite. So again, you have to be on the edge of the mag highs, on the edge of those earlier monzonite intrusive complexes. They were there pre-existing, and the fluids that have brought the mineralisation in have come in around the outside a little bit later. We see the same relationship at Kingswood, which is exciting because we've already got significant intercept there, showing that same relationship on the edge of the intrusive complex. And that's what they look like at North Parks. They're these really pencil geometry porphyry systems, perfect geometries for modern block cave and bulk underground mining techniques. So we don't mind shooting deepish for these things because we know the big guys will take this on as far as a mining engineering sense. Further north again, you start to put Gunnedah Basin and recent cover over the top, and there are explorers out there at the moment that are exploring under 500 metres plus of that cover. That becomes an explorability issue as well. You go through your funds very, very quickly in those sorts of areas. Parks project, again, well placed south of the Tomingley discoveries and the Tomingley gold operations, which is up around 2 million ounce total endowment now. So it's become a bit of a hotspot in itself, that Parks fault zone. And so that's a real kicker for us, that we know we've got some significant holes to drill just down dip from some of these existing intercepts. We're mobilising, we've raised some funds this week. We're mobilising to test multiple targets across multiple projects. And the AGC story's been a good one for us because, as I said, it's helped us to maintain our focus on the Eastern Lachlan projects, which are more than enough for a company our size. But we're excited about what they're doing. We identified a couple of key projects from a private explorer, New South Resources, and they released this week. They're hitting base metal sulfides above this DBM conductor south of Cobar. So a lot of exciting exploration stories. unfinished business in New South Wales. And this is a way of Magmatic retaining an interest in this. And through in-specie distribution, Magmatic holders have retained an involvement as well. Busy period over the next few months, lots of news flow coming through, results due back from the mile drilling. We've got starting to test multiple targets in that Boda area, and we'll move on to Parks. Thanks very much.
Thank you, Peter. What a blast, eh? Raising capital for drilling in our home state. It's a great thing. And actually, there's a very interesting halo story about how in history, all the closest areas to Sydney were sort of rushed past on their way as people went to the far distant frontiers. And some of the, if you tell them in Western Australia that ask them where the largest gold mine in Australia is, they think, thinking around Western Australia. No, it's just 100 miles from here. And it's a very hot area. It's as good as Papua New Guinea, and it's just really in its infancy and so close to Sydney. It's just a quirk of history. So another company who won't be speaking tonight, but Legacy Minerals, also have a really interesting prospective portfolio. Chris and Matt are here, I believe. Where are you guys? So have a chat with these fellas. They've got something hot coming up too. People are raising money, and if you want to do something really good, get behind an explorer, because look how our country's running. Mining industry is pulling us through. We need to explore. And so anyway, without further ado, well-known Sydney sider Grant Craighead has been busy in Queensland and Papua New Guinea. And of course, Papua New Guinea is a land of elephants, of huge deposits and a wonderful mining history. And it has helped that nation. It's bought more exercise books for schools than you could imagine. It's a really great way to help Papua New Guinea. And every time we send an entrepreneur, or you don't send them, they actually go by themselves. No one can send an entrepreneur anywhere. Anyway, please welcome Craig Granthead to the stage to tell us the Canterbury Resources. Did I just say Craig Granthead?
Thanks, Mel, Julian, Nick, Cole, whatever your name is.
I had to stuff something one day, didn't I? Anyway, Grant.
Anyway, no hard feelings.
That's good.
Thanks, Julian. Thanks, Georgina. Here to tell the Canterbury story, which is... what is it? It's a high risk, high reward opportunity in the exploration space, a bit like the last speaker in the porphyry copper gold sphere. So let's charge into it. Disclaimer, I'll let you read at your leisure. What does the structure of the company look like? Basically 112 million shares out there, market cap in the low teens, lots of upside, not much downside. We're exploring porphyry copper style things, predominantly in Papua New Guinea, but also Queensland. We've been around for actually quite a while, but in an unlisted sense. Came to the market a couple of years ago and have been spending our money wisely since then. Brief look at the board. I'll only dwell on one member. The John Cleese impersonator on the right is Mike Erseg. Mike and I worked as geologists back in the 80s, 90s, and have worked off and on since then. I got seduced over to the financial side partway through my career, but he's stuck with it, and he's an outstanding porphyry copper gold style explorer right through the Asia Pacific region, as far up the chain as China and predominantly in PNG, a little bit through Philippines and Queensland, New Zealand. He's an outstanding asset, and he's been responsible for driving a lot of the technical aspects of the company. So who are we and what have we got? As I said, we formed 10, 11, 12 years ago, something like that, as an unlisted company, privately funded. It was in the post-GFC period, and there were a lot of opportunities then for a counter-cyclical sort of behaviour. the major companies were pulling back, trying to conserve their cash flow for brownfields expansions around mines rather than greenfields projects. That allowed us to sneak in and get ground that we probably ordinarily wouldn't have been able to put our foot on. We worked that ground up to the point where we got good drill targets, then came to the market a couple of years ago, raised enough for a few drill programs to get attention of the market. Spent that on Briggs and Ecoato with a good deal of success. We'll get into that. And in the interim, we also put our foot on the Woman project, which has evolved into our lead asset in the meantime. Success can be measured in what you find, and we've estimated resources on 3 of our deposits already, each of them sitting around 140 odd million tonnes of low-grade copper with a bit of gold in some of them. Woman, as I mentioned, is the most advanced, moving into scoping study, but we've got some pretty good drill targets ready and rearing on the others. Locality-wise, I'll work north to south. Bismarck up on Manus Island, better known for things other than exploration, but we think it's better suited to exploration. We're in partnership with Rio up there. They've been managing and funding that, but there's a bit of a restructure in progress. Down into Morribee province, we've got a couple of serious projects. Woman adjoins Wafi-Golpu and Akuti Range to the south of it. We've done a lot of activity around there, and I'll dive deeper into that. And then Briggs down in Queensland, inland from Gladstone. We picked this up off Rio when they were going through one of their cyclical phases of pulling out of Queensland, or eastern Queensland. They're now getting back in. So I'll dive into those projects now. So Bismarck, why are the big companies chasing it? Essentially, I think the big companies are going through a phase where they've recognised that there's not really going to be major porphyry copper deposits discovered sticking out of the ground. You're going to have to look for buried targets increasingly as we move forward. And Manus has the attributes to chase that. There's been a lot of exploration over many decades there and a lot of mineral found, but no decent deposits. But in the sort of southern central area, there's a major lithocap zone, sort of advanced agilic alteration. And a lot of the major companies are scaring the world now, looking for large lithocaps because the footprint of the lithocap tends to reflect what's happening beneath, the size of the engine down below. And this is a large one. So they got in there 4 or 5 years ago, something like that, flew Z10 for us, came up with some screaming anomalies, followed up on ground to fine-tune the target. And then things got a bit tricky when they started drilling. They've got a lot of strengths, Rio Tinto, but operating in remote locations perhaps isn't their strongest suit at the moment. They sort of seem to be a little bit hamstrung by particularly OH&S frameworks generated from mining operations, and they don't really roll over into exploring out in Manus. So they had some challenges up there and paused the program, and then COVID came along. So long story short, we haven't achieved a lot in the last 15 months there, but we're coming out the other side with a restructure, changing how we'll manage. Canterbury will have a stronger involvement and do the on-ground work. We're looking to get back in there and do a bit more sampling of the lithocap over the next month or two, follow it up with a bit of geophysics, and then depending on how COVID rolls in PNG, we'd hope to have this ready to restart drilling around, 9, 12, 15 months from now. But the size of the prize is so large that the big companies like this sort of thing. Moving down into the mainland, on the right you've got Lae, second biggest city in PNG, industrial port, road access to the key features on that map, which is Wafi-Golpu up adjoining our Woman project, and down into Bololo Wau and across through the top of our tenements at the Coodie Range. Most people probably have heard of Wafi-Golpu, 27 million ounces, 9 million tonnes of copper in final permitting phase. Can be a bit slow because Mike, our chief geologist, Wanu, our country manager, and myself were running Elders Resources when we put the discovery hole into Golpu back in 1990. So it's a slow train, but it's getting very close at the moment. We've also got other features like hidden valleys and operating mine down east of our Coodie Range tenements. And below low was obviously the foundation, the alluvial gold fields there with the foundations of Placer. Wommam, this has turned into our lead project. Mike had visited this before back when he was doing some work for Newcrest. And Rio Tinto had actually tried to put its foot on it and then pulled out, and we grabbed it back February last year. We grabbed it because we liked the geology and the target and that sort of thing. And what we found when we started trying to gather all the data and all the historical data and validate it was, in fact, there were a couple of coherent deposits here, and we were trying to look for an exploration target and ended up with a couple of inferred resources, which was a very pleasant surprise. And it was a good piece of work over the last 12 months while we've been waiting to get the licence granted. A lot of people have done good work around here. Most of the drilling was CRA, Highlands, Barrick, Newcrest. So on a cyclical basis, everybody sort of comes in when there's favourable conditions, has a crack, almost makes it, doesn't quite, and moves on. So it's our turn next. We got the tenement granted 4 weeks ago, established a site office just out of Ley there, started the stakeholder engagement. Our country manager lives in the province, got some ground, personal ground, not that far from here, so he knows them well, gets on with them well. We're also moving a bit of drill core from the Newcrest phase back down to Queensland. It's going to facilitate more detailed evaluation of how the systems are working up there, but it's also going to allow us to do a bit of due diligence. What we're finding at our current market cap, we want to drive the company forward by dealing with our assets at the project level rather than the equity level. So whilst we raise money and spend on drilling, the next phase of Canterbury as we evolve is to get into bed with a series of major companies, let them do the heavy lifting financially. And because we're chasing assets that under a success scenario are worth multiple billions of dollars, if we can retain 20, 30, 40% through that, you suddenly come up with multiples of 20, 30 times our current share price. So we think the leverage is playing Canterbury at the project level at the moment. I'm sure you can read the resources there. Flicking on to the next slide, you'll sort of look at what they look like in section. There's two deposits essentially about 1 kilometre apart, but they are somewhat different. On the left, you've got Idzan Creek. It's more gold rich. It's actually like there are intrusives there, but it's a brecciated structural zone, runs for about 1 kilometre, typically 100 metres wide, something like that. You'll typically, over the full width of it, get a gram equivalent, with gold typically being twice as valuable as copper in it. But within it, there is a core higher grade zone. So if you wanted to, you could sort of mine double that grades on a third to half the widths. Probably been drilled in part down to 600, 700, 800 metres. And so it's persistent and probably increasing in grade with depth. Wommam, on the other hand, is a bit more typical porphyry system, stockwork veined, remnant lithocap on the surface. We're confident we're at the top of the system. We tend to be in the Pacific, you tend to get these things zoned a bit, so you're tending to get the gold contribution more while you're still in the top of the system. We would expect to delineate quite a bit of gold in the upper parts of this, but then transition to stronger copper zones with depth. So what's the assessment strategy here? as I mentioned, we're bringing core down to Queensland to do a bit more detailed evaluation and to allow partners to take a bit of a look at it. Getting in and out of PNG is a bit inconvenient at the moment because you've got to quarantine 2 weeks at either end, and not too many people are keen on doing that. We're looking to get back up there once we can get vaccinated. In the meantime, we've got our in-country team doing a bit of low-level work and get everything established. We've designed up a drill-out phase for Edzang Creek predominantly, with a little bit of Wammam, 13 holes for 6,500 metres. That should give us 100-metre spacing down to 600 metres depth over a kilometre strike length at Edzang Creek, and a couple of more speculative holes at Wammam to see if we can turn that into something a little more exciting. The rest of the budgets gets blown on the usual engineering studies. A bit south of there, about 100 k's south of Cootee Range, you can see on the right local artisanal workers. There's these sort of opportunities all over the place there. It lights up geochemically. These guys make a pretty handy beer money out of that. Historically, some high-grade sort of epithermal loads that were presumably peripheral to the porphyry systems have been tested by groups like Triple Plate Junction. They then, and they got an encouragement, half ounce sort of thing with a bit of copper. And that stuff looks identical to Kainantu, which is northwest of here, a mine running sort of 1 or 2 ounces and has a market cap off the back of it of a couple of billion. So very worthy target, obviously. We originally got in looking for those loads, but we acquired a lot of Newmont Geophysics. They flew a lot of data, but never processed it before they left the country. We processed it. It lit up a whole bunch of porphyry-style targets. We wandered across some of them and got a little bit excited at Ecoato. There was an obvious bullseye magnetic target. Whilst that didn't really come up trumps, you did go through structural settings where you're getting 18 metres of 6 grams. So the system's clearly fertile there, but going forward, we're looking to focus back on Otabanda and see if we can make something of that. We're going to run a bit of IP because the gold seems to correlate well with sulfides, and we should have the drill targets pretty much sorted later this year and then move into a drilling phase again. Moving further south again, back into lovely Queensland, if the border's open. We acquired these projects, we acquired 2 of them, Briggs and Mannersley, off Rio Tinto 4 or 5 years ago. They were in there because they had a very big footprint of porphyry mineralisation at surface, a lot of alteration. Down the road from Mount Morgan, one of the highest grade copper gold producers Australia's ever seen. So good territory, great infrastructure in the region, obviously with the coal and gas, port facilities at Gladstone, etc. What did we do? Essentially, we focused in on the Briggs project. There was a 2-kilometre strike length of surface geochemistry running 0.2% copper. Fairly obvious target, literally stuck out of the ground. We selected 20 or 25% of it and ran a deep drilling program on it. Came up with 140 odd million tonnes of low-grade copper, and then need to sit back and think about it. We modelled it up in 3D. This is a slice through that 3D model showing in green the porphyry that we modelled. The hotter colours are where we did the drilling to work out a resource. So you can see that we've touched maybe a quarter of the prospective horizon. More recently, what we've done is pulled Peter Pollard in to try and unravel the distribution of various components to work out where the fluids were going and where the mineralising events were occurring. Long story short, his basic conclusion out of that is, in fact, that all the porphyries we're seeing at surface and in the drilling to date are simply hosts, and they're not the causative event. And that theoretical causative porphyry is actually at depth. So we're going to try and fine-tune that target, design up a couple of conceptual holes. But what we are seeing and what we have seen at surface and in the drilling is some interesting features, some quartz zones coming up, some brain rock, some USTs, etc., and unidirectional solidification textures, whatever, which are common at the tops of some of these systems and point you back towards the centre of it. And we're going to use those for targeting. So we've designed up an RC drill program to hit those pretty hard where they're expressed at surface, and we'll start exploring those in combination with the deep conceptual holes. Need to just wind up here. So the value proposition's the next slide. It's self-explanatory. Even though we're a copper gold explorer, just measuring us on our gold resources alone of a bit over 3 million ounces, we're trading on $3 or $4 an ounce. Our peers are on an average of 40 and a range of 12 to 80 or 90. So gives us a share price of north of $1. So we think there's no shortage of upside. Winding that all up, what are we? Southwest Pacific explorer, chasing elephants in elephant country, as Julian said. We've had a crack and been successful on a few. Woman's jumped out as a game changer that's moving into the scoping study stage, so we'll look to add value there in the short term. But on the other three core projects, we've got drill targets ready to be drilled, and that's the phase that we're working into over the next 6 to 12 months. Thanks for your time.
Brilliant. Nice to see PNG back in the lights. I had a great uncle who was a gold explorer in PNG in the 1920s, and he had his partner eaten. No, they try not to. I hardly ever do it anymore. No, it's right out of vogue. Yeah. Yeah, great. It's just such a great country, and there we go. There's one on. Look, here's a name I can't possibly stuff up. Brad Lingo. We're going to go from hard rock to soft rock. Great energy story. And please put your hands together and welcome Brad to the stage.
Thank you, everyone. Pilot is an entirely different story, but it has a fundamental theme behind it I think you all recognize. Probably everyone in this room is an explorer looking to explore, appraise, and develop a world-class resource. And that's fundamentally what Pilot started as. We're just changing resources. Now, one of the things thematic we heard in the previous two presentations was the value of the data that the government pulls together. That the government is putting lots and lots of money into helping us. It's now our job to pick up what they've done and apply it. So in a sense, Pilot fundamentally is building off years of work that the government has done, and two, applying that to renewable resources. Now, we are a company making a transition. Pilot IPO'd in 2005 as a junior oil and gas explorer, which then in the wake of the GFC became a 100% renewables company focused on geothermal. Then it decided when it wasn't having too much luck making that come together, it went back to being an oil and gas company. And now I'm putting both renewables and oil and gas together as part of the transition. I was brought in by the major shareholders behind Pilot in April of last year to describe us as a micro cap would have been ambitious. It would have been a nano or maybe, kind of, what's the smallest molecular unit? That's about where we were. And so they said, Brad, tell us what we can do, what we should do with our oil and gas footprint. Now, it did have a substantial footprint. It held the operatorship of one of the largest offshore exploration licenses in Commonwealth waters off WA, stretching along the Midwest coast of Western Australia, that all the way from north of Okajee, which many of you will be familiar with, to south of Cervantes. It just also happens with that permit is sitting in one of the best wind resources in Australia. Now, that's not me just saying that. I can direct you directly to a University of New South Wales 2009 paper assessing the most attractive offshore wind resource in Australia, with the potential for commercialization and commercial development. And lo and behold, they identified the area immediately offshore Geraldton, where our permit sits. The other oil and gas permits that we held were sitting at down in the southwest corner of Western Australia, 2 large contiguous permits immediately to the southeast of Kwinana, where they also contained a project that the CSIRO and the West Australian government had already put $50 million in for a carbon capture and storage project called the Harvey Project, or the Southwest Hub. And that project was stalled. It was kind of quizzical to us. We actually had those permits to try to find oil and gas as pilot, and they were trying to put CO2 down in formations where they believed there wasn't anything. It's not the first time that that coincidence has happened. It's happened in the offshore Gippsland when I was at Drill Search at the early days of Drill Search. The Victorian government shot a 2D seismic survey over permits that we said had oil and gas, and they were shooting seismic to prove the competency of those reservoirs for carbon capture and storage. And they said it's ideal because there's no oil and gas there. I tended to agree with them, so we got rid of those permits. So we've identified within pilot that we held tier 1 assets from a renewable energy perspective. And in particular, in the Midwest region of WA, you have this ideal convergence of some of the best wind quality in Australia, overlapping with some of the best solar quality in Australia, sitting immediately adjacent to multiple high voltage transmission systems, rail networks, 2 natural gas pipelines, recent onshore natural gas discoveries, and a major mining district. And so you can see this convergence of large energy infrastructure, large energy consumption, and an appetite that is able to be filled through renewable resources. And so our goal was to say, we recognize that we have the footprint. How can we retask and leverage off of our existing footprint and our existing assets and utilize them in a different way? That was our objective. Now, when we set about that plan, we rolled that out to shareholders. Our market cap was about $800,000. Our share price was 0.008 of a cent. Today, we're currently in suspension, have been in suspension for several weeks, but our share price is 8.2 cents and our market cap is $18 million. And when we complete a pending transaction to acquire some complementary assets, which RFC Ambrian is the other side of the transaction. Hello, Stefan. where we're acquiring Royal Energy, a private 50% co-owner of the operator of the Cliffhead oil field, which actually our entire offshore exploration permit surrounds. Putting those two assets together, Pilot's market cap will be at the 8.2 cent suspended price, will be $30 million. And we've done that in 8 months. And as I pointed out, mainly through share price appreciation, not simply by issuing lots and lots of paper. We have had to issue paper because when we started it and we had that $800,000 market cap, we had about $100,000 in the bank. That was it. So, but we realized we had good assets. And so our two projects, major projects, all in Western Australia, are the Midwest Integrated Renewables and Hydrogen Project, which has multiple elements to it. One is the offshore wind component. The other is the onshore solar component. The other is the Aerosmith blue green hydrogen component and the Cliffhead carbon capture and storage. All of those elements work together as an integrated energy district with a view of delivering high class, high quality, high capacity energy at low cost and a low carbon output. Now, you've heard a lot of people talking about green hydrogen. I'll talk a little bit about the metrics behind that. But with current technology and low cost renewables going into hydrogen, and this comes, an estimate comes right out of S&P Platts, that will cost you $4.40 US a kilo. That's green hydrogen using low cost renewables and current electrolyzer technology. Now, 95% of the hydrogen in the world is produced through a different technology, and it's called gray hydrogen. It's produced with steam method reformation or autothermal reformation, which is basically taking natural gas and cracking the molecules and reformulating and stripping off the hydrogen through a steam methane reformation process. Every ammonia plant in the world, every urea plant, every refinery in the world has some form of this technology in it. It's a massive market. Now, that S&P Platts estimates that hydrogen is producible using US $3.50 a gigajoule gas input price of $1 a US $1 a kilo. Now, there's an intermediate product which our Midwest project enables us to focus on called blue hydrogen. And that's your gray hydrogen, conventional technology, 95% of the hydrogen in the world, but also capturing the CO2. Using those same low-cost renewables, those same low-cost US $3.50 a gigajoule gas price input, that will generate a hydrogen price of $1.40 US a kilo. Now, the new gas that has been discovered 10 kilometers away from our Aerosmith project, and I'm sure I'm almost positive that back in the day, AWE did presentations here at the Sydney Mining Club about the Waitsia onshore gas discovery, and similarly Strike, the West Arugula gas discovery, both of which are right out on the doorstep of where we're sitting. They'd love to be getting $3.50 US a gigajoule. That's not what they're getting. So we even have lower cost inputs. The other project is the Southwest Blue Hydrogen CCS project in the Southwest. And you can see when we got suspended. It's, if you're going to go into suspension, it's best to do that when you're at a 52-week high and you finish your capital raising. So I'll talk a little bit about that. In the footnote, we did put out an announcement that partially explains that. When we announced the Midwest Integrated Renewable and Hydrogen Project back in September of last year, the ASX imposed a restriction on us that if we were going to spend more than $1.2 million, then we may have to go through a Chapter 11 recompliance. We are looking at an acquisition that complements the Midwest Wind and Integrated Renewables and Hydrogen Project that we're working through whether that in fact triggers that test. And so while that's being assessed, that's why we're in suspension. That's in the ASX, most recent ASX suspension request that we went in on Monday. Now, in terms of the board, I'm the chairman of Pilot. When we complete the Royal transaction, there will be a restructuring of the Pilot board. Myself, I'll remain chairman. Daniel Chen, one of our long-term shareholders and supporter of the company, will remain on the board as a non-executive director. But then Tony Strasser, some of who you may know, he was worked for many years with Steve Crockney before Steve died. And he was the foundation CFO of Anson Energy, one of the no longer existing Sydney-based oil and gas companies that was ultimately taken over by Rock Oil. And that's how we effectively, Tony, then when Rock was taken over by the Chinese group Fosun, Tony and Chris Way put together Royal and acquired an interest in the Cliffhead oil field from Fosun. And then Bruce Gordon, many of you may know, very well recognized Sydney Resources accountant who I've known both Tony and Bruce for many, many years. I'd actually helped Anson back in the early 2000s get IPO'd. So our strategy and opportunity, which I've highlighted in part, is about looking at world-class assets and taking those assets and looking at the convergence and transition, how we can use those same high-quality assets in a different way, in a way the market wants them to be used. Now, recent events in the acceleration of the energy transition, it's almost something you see daily. After we had announced the Midwest Wind and Solar Project, the WA government came out with a call for expression of interest for the Oakajee Strategic Industrial Area Renewable Hydrogen Project, where they are looking for 1.1 gigawatts or 1.3 gigawatts of wind and solar right there in the Midwest, which is almost identical to what we had announced as our first scale of project, where we're looking at 1.1 gigawatts of offshore wind to effectively drive Western Australia as a leader in the hydrogen transition. Western Australian government says, we've done it with LNG. We have the right resources. We can do it with hydrogen. We're not going to wait. We're not going to sit. We're going to try to capture a major position in the Asian hydrogen market by doing this. When APA, Australian Pipelines Group, did its half-yearly results, effectively, it would have been a week ago. Was that a week ago today, or was it a week ago last Friday? They announced their APA Pathfinder program. Now, being a little cheeky here, on the very first page of that presentation, when they talk about the Pathfinder program, their very first bullet point is they said they're looking to invest in pilot projects. So we are and have been in discussions with APA. I think that was an accident referring to pilot projects, but I'll take it if I can. But they are targeting the production of clean molecules. They're targeting hydrogen, and they have already made 100% hydrogen ready, part of their West Australian pipeline network. It also happens to be the part of the Parmelia gas pipeline network that sits right within the heart of our Southwest hydrogen and CCS project. Then all of you will be quite familiar with Mr. Forrest, and he has come out quite ebulliently about Fortescue's objectives in energy transition and hydrogen. And he has announced a number of major initiatives, one down in Tasmania, as well as an MOU with Kawasaki Heavy Industries to develop the Australia to Japan hydrogen supply chain. And only on Monday did the Commonwealth government announce a new program for carbon capture use and storage development fund with grant money of up to $25 million per project for pilot projects or pre-commercial projects aimed at reducing emissions. We already have 2 of those projects in essentially advanced stages. And there's, you can see, and submissions are due at the end of this month, which we were already working on things as part of both the Southwest Hub and the Midwest Integrated Renewables Project. So the case for renewables, one thing when you've looked at the whether it's the IEA or any of the other major government energy forecasters, their forecast as to the rate of the reduction in cost of being able to produce renewable energy, they have predicted cost, but what they've cost reductions, but what they have dramatically missed is the rate of change. And I guess the way I've heard someone put it, it was always too expensive until it wasn't. And that's exactly what's happened. That there has been this dramatic reduction, dramatic increase in the efficiency of the technology, but equally the rollout and the production and deployment of the technology at scale has dramatically driven down the cost. And through that dramatic reduction in cost, it's now at the level that on an all-in deployed cost basis, that in the right jurisdictions, which Australia happens to be one of those right jurisdictions, it is actually cheaper than your hydrocarbon alternatives. And it's also more flexibly deployable. Now, where we're focused on hydrogen is at this end of the spectrum. And it's at this end of the spectrum on the basis of, one, our renewables footprint, but also the fact that we're able to focus on the blue hydrogen. Because our objective is to deliver not only best quality, but best price by the nature of the projects that we're putting together. So this is a kind of very simplified overview of the differentiators between green and blue hydrogen, and how that our footprint matches up with the ability to deliver that low-cost solution. Now, in looking at our Midwest renewables and hydrogen project, It is, a premium renewable energy resource and anchoring a number of what were disparate elements and integrating them. And that's where the value proposition lies. The Midwest region is a world-class wind and solar resource. This is both the analysis by the World Bank and by the CSIRO and ARENA. And you can see that western coast of Western Australia is equivalent to the same quality of wind resource as the North Sea. Much better weather. And I'm quite familiar with it because back when I was with Commonwealth Bank, I actually financed Rock Oil's development of the Cliffhead oil field, and I've been on the Cliffhead platform. It's windy out there consistently. So the Midwest region is a renewable resource zone with all the right stuff. Premium resource, established infrastructure, and a clear hydrogen development pathway. There are multiple commercialization pathways. Now, for quite a few of you, you probably recall that in the 1990s, the West Australian government was very, very, very focused on direct reduction iron. You probably remember the King Stream project, the Midwest Iron and Steel projects. That was all about marrying up cheap West Australian natural gas with the magnetite resource coming out of the Midwest, and upgrading and processing and value adding to that iron resource. Green steel is simply direct reduction iron using hydrogen. Midrex, the leading provider of direct reduction iron technology, is already migrating their DRI process to be hydrogen driven rather than natural gas driven. Now, I think it's a fairly simple proposition. Australia provides 40% of the iron ore in the world. We have the best renewable resources. They are actually directly proximate. It's up to us to take up the challenge of whether we're going to capture that or simply export hydrogen and continue to export iron ore. Or are we going to value add? And the Grattan Institute published a paper. This would have been, I think it was May of last year. It was called Start with Steel. And it was entirely about the opportunity that Australia has to capture a position as a provider of green steel. Now, interesting enough, I don't know if many of you are familiar with the Rocky Mountain Institute, but they published an interesting article middle of last year, and it talked about the dramatic change in steelmaking technology globally in the 1960s, where up until the 1960s, there had been this older, the Bessemer open hearth furnace technology. And there'd been a Swiss metallurgist who'd been working on a new refining technology for steelmaking that everybody said, too expensive, until it wasn't. And within 10 years, 90% of the total steelmaking capacity in the United States had changed to the new technology. They just scrapped the old stuff, because they knew if they continued to make it the other way, it was less efficient, more expensive, and it made the shift. That's the opportunity that Australia is. So how does Cliffhead integrate with this? The Cliffhead is a proven oil field. Interesting enough, when it was developed, it actually contemplated an enhanced oil recovery project, but it was going to be a chemical flood. It has dual pipelines running to the field, one from the field to take the produced oil out of the field to onshore processing, and a return pipeline for injection. It's got the existing infrastructure. When you then look at the offshore wind, we looked at the Cliffhead platform. Offshore wind farms, you install a large offshore substation to gather electricity from your offshore turbines. The cost of that infrastructure alone is, for a offshore substation, is identical to an oil and gas platform. It's the same thing. It's just what you've put on the platform. And everyone was looking at abandonment liability cost for Cliffhead and assigning a cost of $40 million, when actually it's a $150 million net asset. Because if you're going to do offshore wind, that's going to cost you $150 million if you did it on a greenfield basis. So our Southwest Blue Hydrogen project down in the Southwest, you can see where Perth is and Kwinana. You can see the natural gas pipelines. And this is right out of the WA government's Southwest Hub project flyer. You have gray hydrogen being made right now at the West Farmers ammonia plant, right there in Kwinana. So why not make it blue hydrogen by capturing this CO2? So our strategy is an integrated development strategy, taking existing oil and gas assets, not walking away from them, but actually using them in a different way. And that's where I think the real value proposition is. So some key milestones for us. We try to move as quickly as we can. I think probably anyone's here is going through any sort of IPO. They realize that the ASX and ASIC are overwhelmed with the volume that they're seeing right now. So sometimes the regulator struggles a little bit to keep up with the rate of change. So in summary, we hold material resources. We're leveraging those resources through our existing oil and gas footprint. We own key licenses and infrastructure that we're retasking. It is sitting with a world-class renewable resource, and we have an experienced team to take this forward. Our view is we are a development company, and ultimately we're going to get this through to proof of concept and proof of feasibility, and look for, as many of you would be familiar with, bring in the majors to actually own and develop it. So thank you very much.
Would you gentlemen like to come up and field some questions, please, Peter and Grant? Of course, Brad, you're a busy man also with Armour Energy. I know that.
Yes,
so
I haven't walked away from oil and gas. That's for darn.
That's it. You know, who are you going to call? So if we got any, are we just going to bellow them out, or we got a microphone? Wonderful.
I have the microphone.
You have it. Have you got a question?
No, I don't.
Okay. Just while you're thinking of that, one of the amazing things that I noticed about what carbon capture and storage seems so complex, everyone talks about it. In the United States, in Mississippi, I saw a 14-inch pipe that taps a CO2 dome and trucks CO2 like 100 miles and re-injects it as tertiary extraction for oil in the old fields of the Mississippi Delta, you know, and you think, where's the mystery? They're actually extracting CO2 so they can inject it into the ground.
Yep.
So completely got me fussed why everyone's. I don't understand why everyone's so. I've got a question.
Thanks, Brad. And I do remember it's Kerry Stevenson just at the front here. G'day, Brad. Great past with Drill Search and Beach and that deal. I noticed there's not a lot of cash in the bank at the moment, lots of moving parts, currently suspended or suspension. Could you just talk us through what the next steps are and how what the focus is? Because from the presentation, there were a lot of moving parts, and to me, it seemed like there needed to be a bit of a little bit more cash in the till.
Well, when we will effectively end up having it when we complete the Royal transaction, we'll have another $1.5 million in the bank. So that's not reflected on the balance sheet currently. We have fully refreshed placement capacity. We are in these projects very much at the feasibility and front-end development stage. And this is where it becomes very, very interesting. And we've had this discussion with other people coming from, an upstream oil and gas exploration background. We measure our costs, on a very kind of simplified basis, is how much is it going to cost us to do a big 3D seismic shoot? How much is it going to cost us to drill a well? This work has already been done for us. And so when we complete the transaction on Cliffhead, we'll actually then also have a production stream. We'll have operating revenues coming off the Cliffhead oil field. So we will be a cash flow generator as well, which those cash flows can help support, part of the feasibility work that we're doing to get us to the point of saying we're at we've demonstrated feasibility, and then we go through another capitalization event. As part of our overall strategy, we're looking at, and how we look at assets, they're assets that have much shorter cycle times from concept through feasibility to sanction. And therefore, and that comes off of leveraging the existing footprint. For example, virtually all the work that you actually would need to sanction an offshore wind project in the footprint of our Midwest wind and solar project was actually already done. It was done. The environmentals, the mid-ocean conditions, wind studies, subsurface, geology, that was all done to be able to drill wells offshore, install platforms, lay pipelines. It's now just retasking it. You can go pull down the 2004 Rock Oil EIS report. You can just download it, and it tells you it's all there. And it's now just retasking it to putting wind turbines offshore.
Thank you, Brad. We got one down. I'm conscious that we've got one of the finest bars in Sydney right beneath our feet here. We might make this the last
Another
question.
quick one for Brad. Dan Lansky's my name. Could you just give us a quick lesson on the breakout of natural gas to hydrogen as you see it, and the advantages of that process about electrolysis?
Yeah, sure. So in effect, your natural gas, your pure methane, CH4, and you're then putting energy in to break that molecular bond between the carbon and the hydrogen, and you're left with free carbon. And ultimately that carbon becomes CO2 in the gray hydrogen environment, and you're left with H2. Now, that's a process that's been I think that process first started in the 1880s. So it's a well-proven process. Now, there are lots and lots of refinements that have occurred to it. And there's a new technology coming out that's called MATR, modified autothermal reformation, which actually makes it even easier to capture the CO2 out of the process. And the objective of MATR is to actually reduce that $1.40 a kilo hydrogen cost with carbon capture down to $1. And so if you take that, it's simply, you've got two output streams. That's exactly the way the process works right now. We've just been letting all the CO2 go into the atmosphere because there hasn't been an incentive. And as Terry pointed out, the government will pay for it. There is the Commonwealth is modifying the terms of the emissions reduction fund, which already exists. It was originally funded for $1.8 billion, of which 80% of that $1.8 billion that's been spent to date actually has gone to plant trees, which is a good thing. But lo and behold, and this is where Angus Taylor comes from, he said, wait a second, you're picking winners. Why not? If it's reducing carbon, it's reducing carbon. And so let's be technology neutral and let the economy sort out what's the right technology for carbon reduction.
Thank you, Brad. Okay, well, look, we'll call it stumps there. We are looking, the event after this, we're looking to have a copper. Yeah. What's the problem, Jared? Yeah, there aren't any. You want to do this job?
I've got one for you.
Oh, there you go. Thank you, Brad.
How much remote power do you need? Because you've seen that at the De Grosso mine. They've actually switched that over to combined solar and batteries to dramatically reduce their costs.
Well, these guys are explorers, man. You know, wait till they get it.
No, they're going to be producers soon.
All right, Chairman, that's it. No more questions. Can't trust these guys, can you? So we're looking for a really hot show 2 out from here on copper, okay? If you've got an idea about what the absolute best copper stories you want to see on this stage here, chip them in, get to Georgina and just let Georgina know, and we will get them here on this stage because I think it'd be a great time to, I've got a list, but let's get the ones we really want, right? Now, next event, of course, will be Jake Klein. And how good's Jake, eh? How good's gold? How good's Jake? He's a great story. Really looking forward to it. And to thank you, gentlemen, for all of your efforts. And Brad, for stealing all of the question time. You get your book last. We have a great book here by Michael Schellenberger, which is called Apocalypse Never. And it's all about energy and how to not frighten your children with that the world's going to end, and a lot of alternative views about the world. And the subtitle is Why Environmental Alarmism Hurts Us All. So the future's a great place. You guys are all talking about it. Exploring for Gold, New South Wales, Queensland, PNG, Brad with his energy in the West. We're all interested in the future, and these books are about that very place. Would you please put your hands together for these three gentlemen as I give the gift. There you go, Brad. Thanks, Julie. All right. Okay, we'll see you next month for Jake Klein. Thank you.